Hello, everybody. In this session, we are talking about a business entity. A business entity refers to a legally recognized organization that engage in commercial, industrial, or professional activities with the aim of earning profits. It can be a sole proprietorship, LLC, or any other legal structure recognized by the government. It might also be referred to as a type of business or business model. The concept of a business entity is essential for anyone starting a business as it helps them define their legal and operational structure. Understanding the different types of business entities can help business owners choose the most suitable option for their company. The choice of business entity can affect various aspects of the business, such as taxes, liability, ownership, and governance. And then, how is a business entity governed? State statutes, state statutes control the way each business entity is created and governed, including the default sole proprietorship and general partnership. When it comes to business decisions and actions, the business entity itself can define its own rules through organizing documents such as the bylaws, a partnerships agreement, or an operating agreement. The business own rules will prevail as long as the rules are in line with the baseline requirements of the state statutes. Accordingly, each business entity may have a different baseline in terms of the rights, privilege, or responsibilities for the business and its owners. Choosing the entity that meets the farm operation owners, especially owners' goals, can help bring everything into alignment. And then, why are business entities important? Your business structure affects how much you pay in taxes, your ability to raise money, the paperwork you need to file, and your personal liability. You need to choose a business structure before you register your business. Consulting with business counselors, attorneys, and accountants can prove helpful. And then, how business entities impact your business. The type of business entity you choose will impact how you're taxed, how much paperwork you're required to do. For example, corporations are taxed differently than sole proprietorships. The type of business entity may also determine who is legally responsible for the business debts and liabilities. For example, shareholders in a corporation are not usually liable for corporate debt, while sole proprietorship is personally liable for the business debt. And then, how business entities work. Choosing a business entity is one of the first steps that a business should take. It affects what tax forms you'll file and what would happen if your business were sued. Many business structures offer protection for your personal assets. Your business assets could be at risk if you're sued, but your personal assets might not be. New business entities are formed by filling paperwork with your state, if required, and paying any required fees. The best types of business entity to choose depends on the type and nature of your business and the number of owners. It is one of the most key decisions that business owners can make, so it's best to consult tax and legal professional for advice specific to your business. And then, which entity is ideal for your business? There is no single and simple solutions when selecting the best type of entity for a business activity. It is important to do your own research and decide what type of entity is right for the business' unique needs. Each type of entity has its own rules and regulations to follow, and considering the various elements of each type of business entity and can help you make the best decision for your particular situation. Some factors to consider include the nature of the business, financial liability, eligibility, and legal requirements, who owns and runs the business goals, registration and costs, and specific business needs. And then, what are the types of business entities? There are four types of business entities: sole trader, partnerships, limited liability company, and corporation. We start from the first, sole trader. This one is the simplest as it follows the pass-through taxation principle. The sole trader has unlimited liability and pays taxes on business revenues and personal expenses separately. And then second, partnership. A partnership is an association of two or more people to conduct a business and share in its profits and losses. And then the third, limited liability company. The owners and the business entity are legally two separate entities, which gives you limited liability for the debts and actions of your business. And then fourth, corporation. A corporation is a separate entity from its owners, which means that the shareholders have limited liability for the company's debts and obligations. And then, what is the business entity concept for accounting? Accounting to the business entity concept, also known as the separate entity or economic entity concept, financial transactions that happen in a business should be kept separate from those of the business owners or any other business. That means when money more and moves in or in and out of the business, those transactions should be kept in their own set of accounting records. Business owners can apply the business entity concept to any type of business to make accounting much easier. I think it is enough. Thanks for watching. Thank you.